welcome to today's fast video, which is called S&P 500 Breath. There have been tariff news and looming signals leading towards Iranian deal, where the enrichment point is no longer a stumbling block. It seems so. So that's why commodities reacted the way they did yesterday, and that's what we saw unfold in equities too. However, first there had been a highly technical pattern of the opening bell where I had, based on a certain premium clients share level, identified a good shorting opportunity, which is how clients made their 24 ES points yesterday in intraday terms. And that's been the 5915 level, following seeing performance around Friday's touch of 5865 and then the 5895 serving as a magnet couple of times since. So, such is the daily perspective, where we see not really an appealing price action for swing traders at the moment. It's a consolidation like last time. However, those breath signals are invaluable, and I mean mostly the weakness seen in the 20-day, meaning percentages of stocks trading above their 20-day moving averages. Compare that to the 51 and we see slight change of gears together with vulnerability, potential vulnerability to the downside, which is one way how traders can play the current market environment. Those steep gains following the Liberation Day or in the run-up to the 90-day tariff pause, those we had already cashed in. Volatility has died down since, and it can be safely stated that after the opening 3rd of May, we had seen highly technical mostly sideways pattern in stocks. So there are certain flies in the ointment when it comes to market breadth still, and that can be seen as well in the advanced decline line rather than advanced decline volume. But that is a daily perspective in the volume, and I'm used to how it is being charted and what can be unfolding the day thereafter. So what's more important for me is the looming, dragging bearish divergence in the making when it comes to advanced decline issues, advanced decline line in other words. So that's part of what should not escape any swing trader. In intraday terms, the situation is easier. There I can play the opening retail traps and institutional buying during the day and positioning towards the close and so on and so on. That's a different situation. But for different market environments, different tools. The daily perspective of sectoral performance had been finally, after a long time, leaning risk on yesterday, but it's leaving a few things to be desired, especially financials and industrials. So don't be sucked in by the deceptively weak healthcare. There are still good names, and I have picked a few when it comes to the weekend analysis shared with daily analytics, meaning into your mailbox, meaning trading signals or stock signals, clients. For now, what matters is that tech had been surging and materials together with energy have welcomed the developments of yesterday in the political arena. Macmillan summation in this, no great change from when I last presented this very chart to you at the end of last week. So we are seeing some kind of a very lackluster rotation. I would not call it healthy because this is not yet in the process of distinctly is the keyword here, building up for a fresh upback. The key message is being hidden when it comes to volatility metrics. See how VIX, plain VIX, is moving to the downside, painting a picture of complacency. Whereas if you take it as a ratio with forward-looking volatility considered, the picture is one of slightly building pressure under the hood. Nothing spelling an immediate eruption. However, I asked what I had been talking with clients yesterday who would want to be aggressively long before non-farm payrolls, and forget not, tomorrow we are getting services PMI, which is another very crucial element, but fundamentally forget not about AVGO earnings and my premium thoughts, sharing clients what it is about Nasdaq performance, usually before and after AVGO earnings. Adding the perspective of last week NVIDIA, when we did enjoy that great profit bump, and it was superseded by very steep 100% and more retracement to the downside. So take bulls, take note. Here we go with the 15-minute chart to the pre-market. 5.915 had not been even truly reached today in the European hours, and we are seeing stocks building higher. So the positive momentum of yesterday is kind of continuing, but it's still within a relatively tame market performance. Nothing of the steep run higher that represents the most prominent bearish candle of yesterday on this 15-minute chart, which was the one that we caught our short gains with clients yesterday on. So much for the market setup heading into today. Have a great day and talk soon again.